So Tesla stock is having the absolute worst week since 2020. It's down about 14%. And I know you might be saying, Carter, why? And it's because Elon Musk is selling Tesla. Let me explain. But before we jump into it, Elon Musk himself said to like and subscribe, so do that right now. So over the past week, we've seen Tesla become very, very volatile. It's going up and down at very rapid rates. And as of today, Friday, it's down 15% this week, which is the worst week since the 2020 crash. Why is it falling so much so fast? Because it's already down 62% this year. Comparing to the S&P 500, which is down about 15%, meaning you would have been better to invest into the S&P 500 than one of the strongest growth stocks out there. And I completely understand growth stocks are more volatile, they're more risky, they carry more reward, and they go up and down at rapid rates. But what we've seen is Elon Musk do some crazy things. So right now, Elon Musk, the CEO of Tesla, has sold about $3.5 billion worth of Tesla stock. And that's about 22 million shares, which has caused a whole bunch of investors sell their stock. And the reason why a lot of these investors are selling is because if you see the CEO selling that runs the company, why would you want to invest in a company where he's selling the stock? And guys, the reason why he's selling his Tesla stocks, it's not because he hates Tesla or he's quitting Tesla anytime soon. It's because of his Twitter acquisition. Now, for those of you that don't know, Elon Musk bought Twitter for $44 billion. Now, how do you expect the average guy to afford that? And I know there's a huge misconception out there when somebody's the richest person in the world, you think they just have a bunch load of money in the bank. That is absolutely not the case. What they have is assets, and what Elon Musk has is Tesla's shares. So the only way that he can afford the Twitter acquisition is to sell some of his assets, which is the Tesla stock. And over the past year, we've seen Elon Musk actually sell a whole bunch of his shares, comparing it to his other years. And the reason why he's selling it is also because the company of Twitter has suffered major losses, was $1.7 billion in debt, and he's trying to fix the company. So you have to understand where he's coming from. He's coming from, okay, I have Twitter stock, I have Tesla stock, I'm gonna sell my Tesla stock and start working this company to become more valuable, because he probably sees a higher return on his money with Twitter than in Tesla. Not saying that Tesla is a terrible company or going under anytime soon, but he probably just needs the funds there so he can make more money and grow Twitter to be a larger company. And make sure you guys stay tuned till the end so you guys can get my personal mindset with Tesla and my investment strategy with the company. And I know a lot of you might be saying, well, Carter, Tesla is done. Tesla is over, there's no opportunity there. Well, I hate to break it to you, but that's not the case. A whole bunch of analysts gave Tesla a price target of $250. So looking at the stock right now, which is under about $180, you're looking at a pretty solid return of well over 30-40% on your money, and this is a 12-month price target. So if these analysts are correct, we're still looking at a fantastic return. And not to mention, right now, in just the general S&P 500, we've seen some of the worst weeks. Yesterday, the S&P 500 was down about 800 points, which is one of the worst days we've seen this year. So I just think we're seeing kind of a perfect storm with the economy. We're seeing these growth stocks, very similar to Tesla, get annihilated. And on top of that, we have that perfect storm with Tesla because Elon Musk selling the stock, which has caused a whole bunch of panic and emotion with retail investors to sell their stock because they don't know what's going on. But honestly, I always think it comes down to your personal mindset. And this is my mindset with Tesla. So for me, I think Tesla carries so much potential. Looking at all the fundamentals, the company brings in a ton of money. They're hitting all their revenue. They're hitting their deliveries. And yeah, companies go through ups and downs all the time. But for me, Tesla carries a lot of potential. I'm investing about 5% of my portfolio size into Tesla. Now, it's enough to make money, but it's not enough to where if this company goes under, I'm only out 5% of my portfolio. It's nothing too crazy, but it's enough where if this thing starts squeezing up, I can make some money off it, but if it goes to zero, I'm only out 5%. And I believe the best strategy for this is to dollar cost average it. So you're gonna invest weekly, monthly into this. So as the stock continues to sell off, you're averaging down those share prices. So when it recovers, you make a lot of money. But overall, just to recap the video, pretty much what happened: Elon Musk selling his shares to fund Twitter, which is kind of expected. He spent $44 billion on a company that's losing money and $1.7 billion in debt. So he needs cash, which I completely understand. Two, we're seeing just a general sell-off with the US economy right now. We have high inflation, high interest rates, and honestly, Tesla has struggled this year for a variety of reasons. But I always think it's a long-term mindset. You have to have that long-term outlook to be successful in the stock market. This is not a get-rich-quick scheme. This is a long-term investment that I believe in. So guys, that is my plan, my mindset. I hope you guys enjoyed it. Make sure you guys like, subscribe, and we will see you guys tomorrow. And stay happy, stay positive, and stay safe. Take care, everyone.